Good afternoon, family. Just Clerk, just coming at you from Orlando, Florida, and I have good friend Leon Daniels out of Texas. Where exactly in Texas?
The DFW Metroplex.
Wonderful, wonderful. So we're back again, next episode, and we just want to go over just talking about some investment ideas where you can invest if you do want to invest, and we actually have some good information that we want to share with you today. So we'll jump right to it. Leon, you should have host capabilities. If you want to jump right into it, that's you're good to go.
Well, before I do that, so today we're talking about ETFs, right? We're really gearing this episode more towards the safe investor who maybe he doesn't know what to invest in, or he wants to invest in all these different companies but doesn't have the time to watch each and every one of them, look for entry and exit points. So the safe bet there is to start with an ETF. And so today we're going to be covering exactly what ETF is exchange traded fund. And then after that, we're going to look at two exchange traded funds, and one is centered around crypto, and the other one is centered around tech. And so we're going to talk about what that looks like. But did you want to show them that slide first?
Definitely, definitely. Just really quickly, um, for people who are not too familiar with it. Um, so I have a couple of websites here. So it kind of explains a little bit what is an ETF. So it says, how is it different from a stock? A lot of people may know when you own a stock, you own a share in a company. So how is an ETF a little bit different? And this, I just pulled this up on the internet. It gave a just very straightforward definition. And it says an exchange traded fund trades in the same way as a stock, but in some key differences. So one share of an exchange traded fund represents ownership in a fund that holds several stocks and bonds, not ownership in one company like a stock. And you can see, just as Leon said, we're going to talk about a tech and a crypto ETF. So this is a stock portfolio, and you can see the logos of these different companies. So it spreads out the ownership, it spreads out your risk in those different companies. And here's another one. So technology ETF, and then a large cap ETF as well. So just a way for you to spread out your risk, and then be able to get a piece of the money that comes from different companies, right?
So yeah, so the way ETFs work, if to break it down further, is an ETF has a fund manager. And so this person basically is deciding what companies they want to invest in. And then they, in turn, they use your capital that you are buying their ETF, which is traded on the stock exchange. They're taking that capital and saying, okay, we're going to invest this much here, this much there, this much there, in these different companies. And it really spreads the risk. So ETFs don't tend to be as volatile. So like, whereas if you invested in Apple and Apple had bad earnings, you're going to lose, some profits in Apple. Whereas an ETF may have um, Apple, Motorola, and several other companies that are in Samsung, and so the hit isn't as dramatic, and so it kind of spreads the wealth. And one other thing I want to touch on with ETFs are some ETFs do pay dividends back. Uh, and you can find that all in the research when you are researching these ETFs on like Yahoo Finance or something like that.
Mhm.
So today we're going to look at two, and then for the podcast people, we're looking at ARK, ARKK, and we're looking at grayscales ETFs. And these two are ETFs, but they're ETFs in kind of a different way. So give me just a second. I'm going to pull this up.
It's that old saying that they have in investing: you don't want to put all of your eggs in one basket.
Yeah. So share screen, and we're gonna share PowerPoint. All right, just you let me know when you see that. Are you able to see it, just?
Yes.
Oh, okay.
Yep.
All right. So right now we have ARK, ARKK. And so basically I have their holdings up. So in ARK, if you invest and buy one share of ARK, you're going to essentially be purchasing a basket of stocks when you do that. So ARK currently holds Tesla, Square, Teladoc Health, Roku, Zillow, Baidu, Zoom, Shopify, Spotify, and CRISPR Therapeutics, and as of Wednesday, Coinbase.
Can you blow
So,
that up any?
oh, do we need to blow that up? Okay.
Good. That's good. Yeah.
Okay. So essentially, when you buy one share of ARK, and if you could pull up just what the price, what ARK was trading at today, you're basically getting a handful of all these stocks, and so it's the real safe way to invest. And then we're just waiting for Jiz to pull it up. But say for instance, you don't want to, maybe you wanted to invest in Tesla and Square and Baidu and Zoom, but you're like, man, I don't want to have to spend the time to sit down and chart these out and figure out good entry and exit points or whatever. You can come to ARK, and from there you can take the uh, you can get the whole basket of stocks. So that's basically it with that one. The next one we're looking at is Grayscale. Let me see if I can zoom out a little bit. So Grayscale, they operate a little bit differently. What they do is when you buy a share of one of their crypto ETFs, they essentially go back out and they buy, that asset. So if it's the Bitcoin trust, when you invest there, they're going to take that money and exchange it for Bitcoin and hold it. So, and if I'm saying that wrong, just let me know. But Grayscale has these crypto ETFs, and they've got quite a few since the last time I've looked. Before, it used to just be Ethereum and Bitcoin, but now they've got Chainlink, they've got Filecoin, they've got Litecoin, they've even got XRP. That's interesting. I didn't know they had that, so I'll have to go find that. But essentially, you have an intermediary. So rather than you going, maybe you're going out to the exchange and buying the coins yourself, you're instead just on the stock market. You're going to find their ETF that covers maybe the digital asset that you want or currency that you want, and you're going to invest in it that way with your money, and then they go out and buy it and they're holding it. So it's traded more like a commodity fund than anything.
One thing to warn people about, specifically about Grayscale, there was some news about them last week. Some of their investors were a little bit upset because of the price swings that happened, and they were asking, the company was asking for a premium for people to get in on the fund, and that they promised them that they would make it up on the dividends and on the appreciation of the fund, and that didn't happen. So people wound up actually paying excessive fees for being part of the fund, and they didn't get the benefit of these coins going up in value. So there's a little bit of controversy in the fee structure that Grayscale is having, but the overall premise of what they're doing is good. They just need to balance it out. And now there's more and more different funds that are now copying what Grayscale is doing. So always buyer beware, read the fine print.
Right.
What is the price that they're asking for? What fees are associated with it? All of that stuff.
And maybe you're just like when we started this, we're talking to the person who doesn't have the time to figure all this stuff out, and they just want to
Mhm.
put their money into something. Anything's better than like a savings account.
Mhm.
So essentially, we're talking to you, but to like this, the seasoned investor,
Mhm.
um, if you really want to invest in cryptocurrency, you need to go directly to the exchange and buy it,
Mhm.
and get a wallet and get into it that way.
Mhm.
If you're just like, hey, that's too much for me, like I know a lot of people that they're just like, I don't get it.
Mhm.
I don't want, but I want to invest in it, but I don't get it.
Mhm.
uh, these ETFs are a vehicle for you to expose yourself to crypto without having to seriously manage it and do your research that you may want. And so you had up that, can you bring back up that ARC
Yeah.
ETF stock price?
Mhm.
So when we talked about ARC earlier, the innovation ETF, the
Mhm.
ticker is ARKK,
Mhm.
and currently it's trading at about $124.38.
Mhm.
So pull up, if you would, uh, what was in there? Tesla. Let's pull up a Tesla stock price.
Mhm.
So Tesla's trading at 739.78. But say you want exposure to Tesla. I mean, really, your two options here are you can buy a fragmented share,
Mhm.
or I'm sorry, a fractional share
Mhm.
of Tesla on the stock market,
Mhm.
or you can go out to the ARC ETF
Mhm.
and spend $124 and get exposure to
Mhm.
Tesla. So there's two
Yeah.
ways to do that.
What I wanted to show, you mentioned for people who want exposure to crypto without having to do a lot of the research and be concerned of whether what they're getting into, is there is a project. It's called DeFi. So they actually is kind of like an ETF, but for decentralized finance projects. So this again is a specific type of cryptocurrency when you're talking about the DeFi space. But that is one of the things that is really hot right now. And there's so many of them. And again, it's the same thing. If you don't have the time to do the research and is this project better than that project, you can there's a fund and this index pulls them all together and you can get exposure to the whole run of it.
Looks like the DeFi top 5 index.
Mm-hmm.
And so for the podcasters, that was found on, he went to CoinGecko,
Mm-hmm.
and then he typed in DeFi
Mm-hmm.
and DeFi 5,
Mm-hmm.
and that'll pull up the everything that you need if you want to do the research on that. So there's just multiple ways to get exposure without having to dive into each coin and really, research each project. Some people just don't have time.
Mm-hmm.
And so really, yeah, we just wanted to explain that aspect to people, and get that information out there.
So again, we have this podcast, Go Broke Investing, and we really are passionate about that. We talk to our friends and family, networking friends, just about on a daily basis, and people are asking us information, and this is a great time for people to be curious. Ask your questions. Don't sit on the sidelines. So, um, for us, again, as we post these episodes, if you have questions, post them in the comments. Reach out to us, and let's find out what your questions are. What's keeping you on the sidelines? What's making you nervous? What are you and your friends talking about? What are you guys debating about? What are you guys arguing about? Let's help you get those answers, and together let's help get some clarity, because this is a fast moving environment right now, especially if you're talking about crypto. And I know I can't stay on top of it by myself, so i
Right.
i leverage my wealth community, and we try to do it together, and we'd love to have you on a journey.
And one thing just to add to that, as you saw, uh, we're not just going to talk about it. We're also going to bring up the research. You saw, if you're watching the video, you saw our screenshots of these different ETFs. You've seen where just basically defined what a ETFs were and how they work. It's not just off the top of our heads. We'll pull the research. So definitely, if you have questions, we'll pull the research and put it together. But yeah, that's it.
So hopefully you're able to get some value. We look forward to providing information that you can take action on, and hopefully you can help build some wealth as well. So until next time, go broke investing.